this is AxeView here. This is another episode of Axe Ed. This time, it's tax season. Let's go over some of the basics of federal income tax and how you can best file that tax return by April 15th. Let's go over some of the basics of taxes that apply to the general population. I'm no tax expert, but I've done a lot of research into this and know the basics. So let's help you figure out that tax return. The United States has a progressive tax system, which generally means that the more you make in income, the higher rate of your income you're going to pay in federal income tax. If you're employed by a corporation, like most people in the United States, your employer will withhold or hold on to and pay to the government your federal income taxes on your behalf. That's called your withholding from each of your paychecks. Here, your employer is trying to best estimate how much you'll owe in income tax at the end of the year based on your current salary. However, our tax code is chock full of special deductions and exemptions that may lower or increase your taxes throughout the year. So your employer might not always get that estimate exactly correct. This difference between the best estimate of your employer and what you actually owe the federal government at the end of the year results in your tax refund, or what you actually will owe to the government. Since your refund, or what you owe at the end of the year, is based on what your employer estimated, that doesn't exactly mean if your refund goes down from the prior year that it means you owe more in taxes. It just means that the estimate has changed year over year. Now, what are the basics of filing? Well, first, you'll be given a W-2 by your employer within 2 months of the year end. This will tell you exactly how much you made in the year and how much is subject to tax before you take into account any special deductions that you'll figure out on your tax return. Now, it's important to do your research on those special deductions because you might be leaving money on the table that you might otherwise be paying to the federal government. So, research if you qualify for the student loan interest deduction, a mortgage interest deduction, or if you participate in a health savings account. And there's so many other complex ways to lower your taxable income. There are two categories of deductions. Those that are considered above the line, which don't require you to itemize your taxes by collecting and saving all of your receipts, or itemizing your taxes with those deductions. Above the line deductions are such as a 401k pre-tax contribution, a health savings account contribution, or your student loan interest deduction, and many others. You'll want to pay attention to these above-the-line deductions because they can take off much of your taxable income, as well as allow you to still take what is considered the standard deduction, which this year is $12,000 off your income for an individual or $24,000 for a married couple. And no matter which deductions you take, make sure you hold on to any pertinent tax forms or receipts that would prove to the IRS that you qualify for these deductions. Once you've figured all of this out, you can digitally put it into a website like TurboTax and H&R Block and quickly file your tax return and have your return refund within about 3 weeks' time. Since a tax refund is really what the government was accidentally holding on to of your income for the year that you don't really owe in taxes, you can estimate better for next year what your taxable income will actually be and if your withholding by your employer is correct right now. Many people get satisfaction from receiving a large tax refund at the end of the year, but what you really want to get to is a tax refund of zero, because that means your employer's estimate of what you owe in federal income tax matches what you actually owe at the end of the year. There are many simple software programs that allow you to electronically file your tax return and figure out those special deductions like H&R Block or TurboTax. The IRS already has a withholding calculator for this upcoming year's tax returns on their website, where you can input your estimated salary for the year, what you think you'll put into a pre-tax 401k account or a health savings account, what you might owe in student loan interest or any other deductions you might have. And that will put out how much they estimate you'll owe in federal income tax. And then you can divide that by how many paychecks you'll have in the year, and you can figure out if you're already withholding too much or too little from your paycheck. And you can reach out to your employer and adjust your withholding with them so that you can get that refund down to zero. I hope this clarifies some of the basics of taxes, But if you ever have questions about your individual tax situation, reach out to a tax professional, as there are many complexities to the U.S. government's tax system. Thanks for watching. This has been Axe Ed.